we did lose our founder, Investors Business Daily's, chairman and founder for so long in this weekend, this Memorial weekend. Bill O'Neill passed away, and he was 90 years old. I worked as his assistant from September 1999 until he retired. I kind of came in and out. I was managing the day-to-day stuff early on, and then I would do special projects for him. But I kind of held a role as his assistant for 15 years. And I mean, I'll just share real quick that when I got exposed to his book, How to Make Money in Stocks, it was after I had already gotten a job at Investors Business Daily. I was a customer service agent to start. I did not know a single thing about the market. I didn't know what the Dow Jones Industrial Average was. But I got hired for the job. It was supposed to be a 1-year job that I was going to do and then move on into teaching. And I read the book, and I was just, I got the book when I was when I was hired. I read it and just absolutely fell in love with it. I just thought it was so interesting. And we were talking at the break. I think one of the things that just kind of struck me was the belief, like, oh, here's like the instruction manual, and this seems like something I can do. Um, and that's where it started. And I had the benefit, even while I was in customer service and I had moved into an education role after a year. Bill O'Neill would come down and give us instruction, because he really looked at customer service as the front line of finding out what the customers were thinking, what their struggles were. So he was always very curious to find out what was happening in customer service, to kind of get that sense from from customers. In fact, when I first started working, I was a little shocked, because I was training and I'm taking phone calls, and a few desks down there were these big long tables, and every now and then a little light would come on. And what was happening is that CNBC was running commercials for us for 2-week free trials of the paper. And Bill O'Neill wanted to try something out. Rather than having a outside company take those calls and just jot people's names down, he wanted to find out a little bit more about the customer. And in order to do that, he wanted to take those in-house. But with all those people calling at once, we didn't have the manpower to take all those calls. So what he would do is he would gather everyone in the building almost. So Bill O'Neill would be on the phone, Scott O'Neill, his son, who was the publisher at the time, Wes Mann, the editor in chief, Chris Gessel, writer of The Big Picture. It would just be, you would call this 800 number from CNBC, and you could potentially be speaking to Bill O'Neill. He would answer the phone and take down your information to send you a 2-week free trial, and he'd talk and say, why, what made you call? What is it that you're interested in doing? What kind of investing do you do? So again, that was when I first started, and I just really got the sense of, you know, certainly he didn't feel like this was beneath him, to take the phone calls. So as a customer service agent taking 100 calls a day, I'm like, well, uh, I can take these calls because Bill O'Neill's sitting right there taking calls along with me. What about you, Scott? What's something that kind of struck you as you started working for the firm? You certainly had a lot more experience in the market at the time that you started working for the firm.
Yeah, I started out as a stockbroker, a lot like Bill. Bill started out as a
Hmm.
stockbroker. Bill started out, with no clients, cold calling, just like I did, and I was at a firm and I was struggling, I was making maybe $600 a month. Now, this was in the mid 90s. So 600 was a lot more then than it is now, but it was not a lot. And I was pretty, ready to quit. I wasn't, I just didn't get it. I wasn't doing it well at the firm I was at. And a friend of mine knew that I was going to quit. And he says, I have a friend that's interested in training somebody. Are you interested in going to work for him? And at that point, I was interested in anything different. So he called me and he says, "Go get this book called How to Make Money in Stocks." And so I at the end of the day, I got in my car and I drove to a bookstore because that's what you did in
Yeah.
1995. And I had to go to 3 bookstores to find it, and then I got the book, the white edition, and I
Hmm.
went home, started reading it, and then he called me and was mentoring me a little bit, and then he says, I'll never forget, he says, "Pull up XYZ." And I said, "Well, I don't have a quote machine, you know, because
Hmm.
where we sat, quote machines were expensive, and so we had one that sat on this rotating desk in the middle. There was 4 brokers that looked at each other while we smiled and dialed, and you would share the quote machine. And there was like a senior broker who, you know, since he was a senior broker, he dominated the quote machine. I said,
Hmm.
I don't have a quote machine. So I had to beg the senior broker, "Can I look at the quote machine, please?" So I turn it around and he says, "Watch XYZ, it's going to move." And I said, "How could you possibly know that? Nothing, you know, where we were at, nothing ever moved except down." And the stock was breaking out of a base. And so he knew it would have a little bit of ump probably out of the base, and it went up. I don't remember, a little bit, few percent, but just the fact that it went up, and I was just like mesmerized that this could happen. So I read the book. I went to work for him. I started to immerse myself in the system. I would go to live events with Bill and David Ryan.
Hmm.
I distinctly remember paying, I think, $5.99 for the very first one, and then the next one was $599, and then the next one was half off. I think if
Hmm.
you ever went again, it was always half off.
Yeah.
So, you know, I used to get Bill O'Neill and David Ryan for, you know, for a weekend, or, you know, a Saturday,
Hmm.
for a few $100s. Um, what an amazing experience. And so I just started, you know, doing it. And then, you know, look, it was 1995. We were in a big bull market. So, you know, don't confuse brains with a bull market. But I believed, Bill had me believing that I could do it, that I could make big money in the stock market, that I could change my life. Remember, I'm getting a check for $600 a month, ready to quit and do anything just to survive. And I just believed him. You know, I just felt like he was showing you the way to change your life. So fast forward, it's March 1995, and I get my first kind of real check. I got a check for $5,000, and I put 3,500 of it in the stock market.
Hmm.
And, you know, can you imagine? It was all my net worth, but I wanted it all in the stock market. And, you know, you buy a stock here and you buy a stock there, and all of a sudden it's working, and I'm putting more money in. And you know, I'm using tremendous margin at this point, and I took my account up a zillion fold. It was just an incredible year in 1995. And his owe it all to Bill. I mean, me and I was telling you before, you know, off air. Me and Arusha used to joke that, you know, he should have kept this to himself. You know, he
Right.
cost himself a bloody fortune sharing this with everybody, because uh, you know, he probably could have just had hired a team of traders and had them sign an NDA and go to work. This is what you guys do. So
Mhm.
um,
Well, a lot of times he would say, actually, this is not my system. This is just the way the market works.
yeah,
And I'm just kind of showing what I observed and what the data says. But he would kind of very humbly say, this isn't my system. This is just what I've observed the market does. And I think you're absolutely right. There's two elements to that. The fact that he shared this with everyone, and not only that, but I mean, how quickly, when he would learn something new, how quickly he would share it with so many people. Again,
yeah,
not holding it. I remember in the aughts when we had this database going back to the '60s of all of these stocks, right? And you could just pull up anything, and it was amazing. And then he went back, and this was, I think we had used some of the data from the Chicago Business School. They had some data going back for like RCA and some of the original Dow components going back to the 20s, and it was monthly data. And he was fascinated by like this data that we got from them for some projects that we were working on. And so what he ended up doing was filling in this back data going all the way to the 1880s, so he could see charts, some of these for the very first time, of what these stocks looked like in the 1880s, 1910s, and everything. The charts that weren't printed at the time, that were just the little boys writing on chalkboards, to make the visual image. And almost as soon as this data was complete, we were pumping out this pumping out these charts for people, and one of the first things he did was in the fourth edition of How to Make Money in Stocks. That's the orange book, or the green book, with a little bonus chapter. He printed 100 charts, some of these going back to that time. So yeah, that willingness to share the information. And let's be honest, I mean, starting a paper is not an inexpensive venture. It's something that is very capital intensive. And if he had decided in 1984 to just keep that money and invest it in the stock market, and he would have been at a very different place. So you see a lot of these folks that are on the Forbes list and stuff, and I don't know where Bill fell in that, but there were a lot of decisions that he made that were not really for the personal wealth gain. They were for getting the information out. So yeah, that sharing aspect, as you said, Scott, huge.
I think and I hope it was Charles Harris, because I think it was Charles who said that Bill once told him that IBD was the one stop loss that he didn't never honored.
Yeah,
He kept throwing good money after bad.
yeah.
So he proved he was human with IBD.
Well, and there was a different reason for it. It was more of a way to give back and help. He always had a soft spot for the little person, right? Because that's he grew up from humble beginnings. Born in Oklahoma, Dust Bowl time period, Depression era. He was born in 33. So, he kind of saw that devastating part of what happened in America. And and so many of the parents at the time, and I mean, his dad left at an early age, and so he was raised by his mom and an aunt that I know that he was very close with. And um, he had to get jobs when he was very young. So he always had a respect for the little jobs, right? Getting a paper route, doing anything you can to bring in extra money so that you can better yourself. And you know certainly it was one of those things where he grew up from that standpoint, knowing that it could be done, and wanting to help other people that were, again, willing to put in the work, because that was another part of it. He was very clear that this is not something that they're going to hand you on a silver platter. It does require work, it does require study, and you might not get it after the first year. You might have to slog along learning some of these lessons and make mistakes, before you really get it nailed down. And even after you get it nailed down, there's still going to be curveballs that come your way, that throw you around, and it's one of those things that you constantly have to be learning. So
Yeah, the mistakes part is key. I know Rusha talked about on IBD Live, and if anyone out there didn't get that chance to watch the segment you guys did on IBD Live yesterday, I believe,
yeah,
it's on YouTube and it's on IBD. You can find it. But David Ryan and
David Ryan did
yourself,
a very touching.
yeah, David Ryan's was awesome. Jim
Mhm,
Ropel was great.
mhm,
Charles, it
mhm.
was really, really good. It was put together, piecemeal last second. Ali's calling everybody, but it was really, really good. So I'd encourage everybody to watch that. And Rusha texted me, he's like, "How come you're not on this?" And I was like, I don't know, Rusha. I don't want to. I don't know what if there's anything I could say that you guys haven't already said so much more eloquently than I would ever say it. I didn't want to ruin the moment.
Mhm.
And I never interacted that closely with Bill like you yourself or Charles. When I was on the portfolio management team, Bill was basically retired. So it was more Scott O'Neill and Steve Birch,
Mhm.
who have obviously a tremendous interaction with Bill. Scott is Bill's son, and but Steve has worked for the company forever.
Yeah.
But and I got off track a little bit. I'm sorry, but what I wanted to say when I mentioned Scott O'Neill reminded me is the mistake part, because that's what I really love about Bill's system versus not everyone on Wall Street, but a lot of them. They never honor their mistakes. They just let them um, go by the wayside or ignore them. And this is a mistake-filled game. It's
Yeah.
very, very different. This is like baseball. That's why Bill loved baseball. You
Mhm.
can go to the Baseball Hall of Fame and be wrong 6.5 times out of 10.
Mhm.
If you get on base 3.5, 4 times out of 10, you're one of the best baseball players in the history of baseball. And that's a lot like how investing is. But Scott O'Neill tells a great story. When he started as a portfolio manager, when he had company money, it was in 2000, sometime in 2000, the market had already topped.
Yeah.
He didn't know that at the time, but in hindsight, it had topped. And he was trying stocks and getting stopped out and trying and getting stopped out. And he said, I'd put a little probing position here and there, and it would get stopped. And he was frustrated. And he went to his dad, and he said, I'm just, everything I try just kind of blows up. And Bill was like, well, this is good. You're learning how to lose. so, so I started in a time where it was great. It was tremendous, and I went on a huge run. But I learned how to lose in '01, '02, '03. That was when it was a little bit tough for me. I had like a tougher period then.
Mhm.
And Scott learned, in the beginning, although he obviously had been investing in his own
Yeah.
account,
He
but
had, he had been investing for a long time, but this was the first
yeah,
time he was investing with Bill's money,
company
with
money.
someone
And
else's
that's a
money.
little different
It's a little
psychologically.
different,
That's
right?
a whole
Mhm.
nother podcast. Let me tell you, running your own money and running other people's money, and I have experience in both. That's a 10-part series if you guys ever want to do that. I have a lot of thoughts on that, but
Uh-huh.
yeah. So learning how to lose is a very humbling game, and I think that's why Bill was so good at it, because he was so humble.
Yeah, absolutely. I mean, there absolutely is that humbleness, and the recognition that you're if you manage your risk properly, that you can have six losses out of 10 and still make a fortune, and that was one of the big points that he made to me a number of times. I remember there was one of the times that I was accompanying him. He was speaking on Kudlow and Kramer. Remember, Larry Kudlow and Jim
Yeah.
Kramer had a show together, and we had flown out. We were at one of those advanced investment workshops that you mentioned. I think it was $7.99 at the time, and he was in New York, and we took a little side trip to. We flew out early so that he could be on Kudlow and Kramer to their studio in New Jersey, and we were chatting a little bit, and he'd asked me about what was going on in my portfolio, and I was sharing how I had round tripped a lot of things, and he asked why I wasn't taking my profits at 20%, and I was saying, oh well, I just thought that one was going to be a big winner. I thought it was going to be a 100% winner, and he's like, what is it about you that you think everything you touch is going to be gold? That he said, I've been doing this for almost 50 years, and I make mistakes all the time. I expect 3 or 4 out of 10 stocks to be losers, and that maybe I'll get flat or a small gain on 3 or 4, and it's going to be 1 or 2 that are those big ones that make the difference. So he said, you can't treat everything like it's going to be that big big killer stock for yourself, and it just reminded me again of kind of my place in things, and the recognition that you put on a lot of different trades, and then you kind of let the market tell you, oh, you've got a big one here. It's that feedback that you get, that can really tell you when things are different. So, but yeah, I think we can both agree, and many of our listeners out there, that what Bill O'Neill started back in 1984 for the paper, but really back in 1963 when he started William O'Neill and Company, started giving data to institutional investors, eventually starting daily graphs for more of the retail investor in the early 70s, culminating in the paper in 1984, the multiple seminars that he gave. I remember that, again, he was doing those seminars for such a low price. Again, considering you would get David Ryan there with him, or
Hmm.
one of the portfolio managers. And then there was a period of time where, shortly after the book came out, How to Make Money in Stocks, or even The Successful Investor, he would go out and he would do free seminars. He would just go out and say, what, I want to talk to people and find out what, especially after the financial crisis. He knew that so many people got hit so hard. He just wanted to find out what was going on, what they were struggling with. And so he was doing free seminars. He'd speak for 3 hours for free. And this was in the 2000s, after, he was already established. He didn't have to do that, but he wanted to get out there and get the message out and help people. So it was just, again, really, really amazing how dedicated he was to improving the lives of so many people. So, any final thoughts there, Scott?
No, no, I think it's well said. Uh, sad day, life well lived, and I think I just want to say thanks. I guess that's the best thing to say.
I couldn't agree with you more. I mean, I just think of the trajectory that my life is on now, um, and how much he impacted that trajectory. You think of those meteors that can knock something off course in the cosmos, and I'm just grateful that the the meteor that was, or maybe the asteroid or planet that was Bill O'Neill, kind of hit this little meteor and put me on the course that I was on. So